Coming to you live here from Northern Israel to talk to you about the Bitcoin markets on this Thursday. Once again, say it with me, aren't you so happy it's Thursday? That's right. So what exactly is going on with Orange Coin? Well, if you saw the VEPs yesterday, you know that it moved very nicely along them. And towards the evening U.S. time or afternoon, some hours before the end of the day, it tapped that random 6K line once again. And what we saw, right, was the continuation of the movement according to the VEPs. To no one's surprise, if they know how to read the VEPs, we saw plenty of distributions and mean reversions on the lower time frames. And we saw the return of the Bitcoin to the 100K levels. Last I looked at it about a half hour ago, it had dipped a little under it. It certainly was not a problem. Did not look like it was set up for a terrible drop or a massive explosion. It was sized just well enough to continue moving nicely throughout the new day. And when you look at the CDR of the day, when you look at where the asset has been moving all week, you realize very quickly that the asset is frankly doing very well. And all in all, it is likely to continue thriving for the coming days. And we are likely to see it close in on the mean reversion to the daily 3012 RMLR. That could happen today, tomorrow, the next day easily, sometime in the given week, unless we see a significant clawing back by sell pressure, which could obviously drive the assets back down if it's significant enough. And for the meantime, the buy pressure seems to have the upper hand. It continues to make its way forward. You tell you don't gaze into the eye of the sun, right? It's a thing you should not do. Do not gaze into the sun, for it shall blind ye. So, but can you stare at a picture of the sun? Yes, you can. It shall do you no harm. So, foggy field with sun up above. It's very much the state of Bitcoin, if you ask me. The green shoots are growing close to the ground. They started to spring up a little in this winter. There be trees ever standing firm and the sun rises. Giving light and life and energy to the world below. So here's an interesting story. You may have heard this. Has to do with Bitcoin. Which is, did you know that the HFT firms have been doing exactly what we've been telling you, what I've been telling you for many, many years, and what we've been telling you over at Alpha Trading for many, many years, which is they keep the market rigged. We've been telling you this for years, donkey's years. How do they rig it? Well, it's just like we've been telling you. The distance to the servers of the exchanges. So they keep their servers right next to the servers of the exchanges in the same exact warehouse. And in doing that, they basically have faster time to trade than you do, right? And so they can get entries better than you can. And when you buy a stock, it's, suddenly more expensive than when they buy it, or when you sell a stock, it's suddenly cheaper than when they sell it, right? They get their orders filled before you. Even if it's by a split second, it's enough to make a difference. And that's why they're constantly winning. And why retail traders who are trying to outsmart them are constantly losing. And if you've ever seen that 60 Minutes story where they interviewed the guys from IEX, right? The founder of it, the original founder of it, came from Royal Bank of Canada, RBC. He used to work there, and he was a trader there. He became their head trader there. And then he discovered on his own end exactly what I've been saying long before he discovered it, that the markets are rigged like that. Why? Because it wasn't like a secret, man. What's amazing is that a bank as big as the Royal Bank of Canada and many other hedge funds and other companies did not realize this. This was a well-known fact. There was a reason that these HFT firms placed their servers co-located literally on the same rack as the exchanges, or literally on the next rack as the exchanges that they were customers of. And they would buy the shortest possible cables with the best possible transfer rates to connect directly to those exchanges, so that there was no lag time. As opposed to if your servers are like in downtown New York and you got to send them all the way across to, New Jersey, or like 50 or 60 different locations around the country to get to different exchanges. Well, of course, you're going to have faster time if you're co-locating your servers directly at all those exchanges, as opposed to if you have your computers tens, hundreds, or thousands of miles away. Like, no duh. And so they did this interview on 60 Minutes some time ago with IEX. For some reason, this story is making the rounds on Twitter recently. It's just weird how people repost information that's frankly not news, but whatever. That's what reporting is. That's what news is. It's lagging information. And the story is basically this guy who founded IEX created this exchange where they added this, what they call a black box, where they add like thousands of miles of fiber optic cable to the process in order to slow down the orders from high frequency trading firms to make it a more even playing field for the other brokerage firms and, people that are dealing, investors that are trading. And, it's a story about how this guy, just figured out the market as if he figured out something that other people didn't. No, man, other people knew. Okay. What's funny is the story completely overlooks that not long ago, right? Like literally 20 years ago, 30 years ago, it was normal for the market to take not like 0.5% of your trade. Okay. Like they would take 1/8 of your trade as a fee. 1/8. Like 15%. Right? Or whatever it is, 12.5% of your trade. Now you may think that's not very fair. Well, you'd be right. But that's how it was, right? And this was before all the programmatic, algorithmic, HFT firm-based, huge algorithms running massive computer systems doing tradings at millions of times per second. But in today's market, we do have those millions of trades per second happening with those massive bots. And there's really nothing to stop those things from happening. Now, adding those thousands of miles of fiber optic cable may give temporary relief to a lot of those out-of-house non-HFT firm investment houses that are trading on the market, hedge funds, etc., and banks that are trading on the markets. It may help them get their orders filled better. But as a retail trader, you can't use that system. Nope. As a retail trader, you have to go through a company that processes orders for retail traders, and then you get basically the middle liquidity of the order. So even you, when you go through one of their officially approved partners, you don't get the best entries. Not even close. So this company pretends like it's the savior of the market, but they're really just helping out their rich friends compete with other rich people that may or may not be their friends, right? Who are working in HFT firms. So it's complete bananas and bullocks, which is appropriate because this is going to be the Chinese year of the bullocks, starting in like 5-10 days, right? In the Chinese New Year. The year of the bullocks, or the ox. So it is complete bollocks, which is not bollocks, but close. And bullocks are bollocks, if you know what that is. But the point is, once again, news proves to be not news. It's just they're reporting something that's well known in the industry. And rather than helping the average retail trader perform better by giving them an advantage, or even evening the playing field a little bit, no, they, if anything, even the playing field for accredited investors and investment houses, stockbrokers and the like, who already have non-insignificant quantities with which to trade. And yes, it would, the bank, was so disappointed when they used to only get 50%, 60%, 80% of their orders filled, and they had to run the order twice and maybe pay a little bit more to get that second part of their order filled. Oh, for shame, the Royal Bank of Canada and other banks who suffered this terrible experience. Yeah, it was not fair. You're right. Market's not fair. I've been telling you that forever. But guess who gets screwed even more? The retail trader. You get screwed even more. Because even with that fix, in fact, now that fix is in, right, the fact that retail traders don't get in on that and can only run orders even close to that relatively by going through a quote-unquote approved middleman broker, right? Well, that doesn't help the retail trader. That means everybody else who isn't a customer of said middlemen approved brokers of that particular stock exchange are getting screwed, which means more than before, retail traders are getting screwed because they're creating more of a distance between you and the middle companies and other companies, right, that are taking advantage of this exploit. And those that already had the advantage because they didn't suffer from the lag because they're HFT firms who have the servers located at the exchange hosts. There's a cat calling for me. Well, it's probably one of mine, but whatever. Based on the way it sounds. But anyway. So that is a not significant piece of news for you, but a very interesting anecdote. If anything, the significance of it would be, see, I told you, right? And we knew this was happening, right? How many years have I already told you that this is happening, right? A long time, a good long time. Right? I mean, I've been talking about this across different platforms for far more than 10 years. Okay? Even when I was marketing specific exchanges in the finance world and in the gaming world as well, telling you guys, hey, just so you know, these things are fun to do, but you should know that they're rigged against you. They're just flat out rigged against you. If you don't recognize that, you're being exploited. So don't be the dumb money. You can still trade, even with the lag. If you're trading the VEPs properly and you're running limit orders, as I constantly tell people to do, you don't have to worry about that. Right? It's only when you allow for limit orders, for market orders, that there's going to be any kind of slippage like that. And if you run limit order, strict setting not to allow slippage on your order, it'll only run the order at your price. That's a very simple and effective way to do that. And the other way is to make sure you're not getting in when there's a sudden rush of trades pouring in. Because you could be trading crypto, you could be trading stonks, it doesn't matter. Right? All going to act similarly. Because what, you think crypto exchanges don't do this exact same thing? They do. They most definitely do. So the way you get around in their game to slow down the time to your own time preference right? And to limit in and limit out. The only time you should ever mark it out is if the trade is suddenly going against you and you weren't expecting it to. That's the only time. Like if the probabilities were saying it's going up and suddenly it's going down, well, then yeah, it's a perfectly reasonable thing to do to mark it out in that situation. Should you make no, you shouldn't. It's a very, very bad idea. Because the fees will eat your profits. Now, again, I know, I just told you, it used to be that market trades used to take 1/8 of your profits, right? Or 1/8 of your trade, period. Whether you're winning or losing. Well, that's true. But we don't live 50 years ago. We don't live 30 years ago in 2025. We live in 2025. The economy is different. Money's different. You would not have been a stockbroker 50 years ago from your bedroom computer or your basement computer or your office computer not on Wall Street or you're sitting in your home office or something, right? Or your small office somewhere. You would be on Wall Street wearing a vest, barking orders for the most part, right? So bear that in mind. We live in the times we live in, not in the times we want to live in. Meaning we don't live in the past if you yearn for that for some weird reason. I know there's people who do. And we don't live in the future. We live in the time we live in. And we trade with the tools we have, not the tools we want. But fortunately for you, the best tools on the market are made by Alpha Trading, and you can get your hands on them actually for free. You can try out our free volatility starter pack and learn how to trade with that. It is incredibly powerful. And you can even try our paid tools completely for free. You get a 2-week free trial if you sign up for the free trial. I highly recommend you learn to use our free tools before you do that, because why would you try to drive a Lambo if you don't even know how to drive a Honda Civic? It's always the comparison that I make. And of course, you can buy our subscriptions to our Pro Traders indicators on a monthly basis, a 6-month basis, and an annual basis. We have all kinds of options for you to be able to buy from. And yeah, so if you want to know how to do that, or if you just want to watch us analyze the markets and see how we do it, and then maybe get your feet wet after that, head on over to alphatraడింghq.com/discord. Once again, alphatraడింghq.com/discord. We do live streams Monday through Saturday starting at 11 a.m. U.S. Eastern Time. All right, beat it.